Mixed day on Wall Street today. You wouldn't have thought it was all that dramatic of a day if you're just looking at the final numbers. You had the S&P 500, it was up like 0.3%. You had the NASDAQ, what was it, up like 1%. And then you had the Russell, it was down 0.4%. Kind of like a day. But you look at where the market went, where it came from, where it went to. It was a pretty dramatic day. You saw the VIX down 10% at one point. It was up 8%. And it finishes the day only up 1.5%. So yeah, this is it's a crazy market, and I think a lot of you guys are probably struggling with this market. I know I've seen a lot of emails from people just really at their wits' end with this with the trading, because it just feels like the market can't decide where it wants to go. I'll be the first to say, you saw the close yesterday after the FOMC statement. I would say 99 times out of 100, you would see that market flush to the downside, especially dealing with banking crises. But that's not what we got. We got instead a gap higher. And then we continued to rally for the good part of the morning. It was around 11 a.m. Eastern where you started finally seeing it top out. And then it was like this slow move to the downside. And then, of course, around 3 p.m., Yellen starts talking and her scratchy, raspy voice that literally I can't even listen to. I just have to read the transcript. I cannot listen to her at all. It's like fingernails down a chalkboard. It's just not happening. And she started goosing the market up by saying, by talking about the possibilities of deposit insurance, which is exactly what she was against the day before, which is the exact opposite of what she was against the day before that. And now, she keeps flipping and flopping based off of what the stock market does. And all as a result, we just keep going back and forth. So it's a frustrating market. If you guys have been doing this for any length of time, you know exactly what I'm talking about. It's compared to what you're used to seeing in a normal functioning market. This is like absolutely bonkers. So don't forget, I'm taking your questions and answers. If you guys put some questions out there, if you guys have some stocks you want me to look at, post it in the comments. I will go ahead and answer all of those here. I have a kind of a hard deadline today. I need to get out, see my son's track practice, or not actually practice, meet. So first one of the season there. So I'll be trying to make this only about 30 minutes today. So we'll go through them pretty quick. But yeah, man, Sam, what's up, buddy? I hope you're doing well there. Keep calm in these markets. I keep talking about how less is more in this market, and that is so true. You gotta not feel the need to trade every which direction. As it stands right now, I'm slightly tilted to the downside in my swing trading portfolio. So I have SH from a long position, which is a 1-to-1 inverse of the S&P 500. But I'm also looking to add more to that exposure as we can get some more downside confirmation. We didn't quite get that today, or enough to really want to push to the downside. So let's go ahead and jump into these charts here. We'll start off with SPY right out of the gate. So this is really what we've been talking about. And this is really the last time I updated this particular chart for you guys was 2 weeks ago. I was on vacation last week, and boy, was it much needed, but probably couldn't have been during a worse time to be taking a vacation. But nonetheless, you have this little purple line of resistance here. That really has no bearing on this market anymore. But what I would throw your attention to is this kind of like a bear flag pattern that has confirmed in recent days, actually yesterday. And let's go ahead and change the color of this one so we can make it stand out from the crowd. But yeah, you have this bear flag. It confirmed to the downside yesterday, just barely. And then today, it's still below it, but just barely as well. It's trying to find some support off of this 200-day moving average. Some days it hates the 200-day moving average. Some days it loves it and will bounce or be rejected at it. You saw during this period here in March where it was trading above it, below it, above it. It didn't really care too much, so it kind of lost its value to me. But over the last 2 days, you keep seeing the bulls try to hold it once again. So bear flag, though. Bear flag's in play to the downside. Now, if you can get a little bit of separation off of this bear flag to get back below the 200-day moving average, then really what you're watching for is how does the market respond to this level right here. And it's not a perfectly clean level. It's probably somewhere around like the 378 area, but it's essentially these lows going back to December. You can also draw it a little bit higher there and maybe say it's from about 380 to 381. So that's going to be a key level. The other thing, if that breaks, then of course, all hell's kind of breaking loose, and you got a retest of the October lows on tap. But right now, from a bullish standpoint, the bears are going to have to hold this 200-day moving average, get back above this broken rise trend line that it broke back earlier this month, and then eventually push its way through this heavy resistance right here that goes back to August of last year. On the Qs, and we got a lot to go over too, so excited about that. On the Qs, got a little bit like somewhat of a triple bottom, double bottom. You can consider this one or two bottoms there, and then you got the second one right there. Broke out, and I think this is what's really I think it's kind of frustrating for me from a trading standpoint, because there's this like flight to safety mentality for the market right now, and it's seeking safety out of the out of like Apple and all these other things, all these other big tech stocks like Apple and Microsoft. Apple and Microsoft make up 13% of the S&P 500 right now. That's like the highest it's been in over 40 years, back in the days when AT&T and IBM were ruling the roost. Now it's Microsoft and Apple, and they make up 13%. That's a huge, huge number. And so if they're positive, most of the market's not going, or the indices aren't really going to go down. And so that's really what you got today. You had Apple and you had Microsoft just ripping to the upside here. You had Apple up 0.7, but it was even up like almost like 2% at one point. And you had Microsoft too, up 2%. It's really, really difficult for the market to have a down day when these two stocks are not selling off. So you have this flight to safety and this risk aspect all tied into these big tech stocks. And there's never a reason to sell them, essentially. I mean, look at NVIDIA, 115 PE. This stock keeps marching higher every day. It's up in 9 days in a row, has not had a sell-off in almost 2 weeks. And so this flight to safety, but also the preferred choice for when you want to put risk on the table, really doesn't make sense. It's almost like buying and shorting a stock, the same stock at the same time. It doesn't really make much sense from the prospect of the market. If you're getting out of the market and getting into these stocks, you're essentially holding up the market by getting into those stocks. I know I'm kind of like talking around in circles here, but it's essentially what it's like. So in any case, with the Qs, you got this like semi breakout here going on. You had the breakout on Tuesday, and then you had the head fake on Wednesday, and then now you have the breakout again today. But it's like a doji candle. So there's really not a lot of conviction. It simply just opened above the resistance and then just stayed there the rest of the day. Volume wasn't very strong today, not like what we saw from yesterday. If you look down here on the bottom. It's really like, if the market is going to sell off, it's got to take big tech with it. Big tech is just continuing to hold the market up, and it keeps us in this trading range. I'm not a perma bear. I've never claimed to be one. Okay. But I also know too, this artificially inflating the market like it's been by saying all these things, and whether you're the Fed chairman or the Secretary of the Treasury, saying all these things to ease the tensions of the market just keeps it going nowhere. I mean, the market needs to sell off. You need to let banks fail. And since May of last year, the market's gone nowhere, absolutely nowhere. 10 months of just basically spinning our tires. I mean, people want good value, right? Let the market sell off. Let people be able to get Apple cheaper. Let people be able to pick up some really good plays at a cheap price. It can make a difference in people's retirement if you do. But the powers that be, they're going to keep saying everything. They keep reversing what they're going to do, just like what we saw with Janet Yellen today on the insurance deposit. They'll keep reversing as long as it smooths over the tensions in the stock market. All right. Yeah. Sam, I agree. It's like the same exact script. And you're also seeing now where commercial mortgage-backed securities, they have all these notes coming due, trillions of dollars worth. You're talking about another implosion in the financial markets. But what you're seeing, especially like when you take a look at, for instance, the mortgage or the regional banks, these things are imploding. I mean, this is absolute like mayhem right here, imploding on the banks. I mean, look at the sell-off going from, this is an index of the northeastern banks, for instance, but going from 1,800 down to almost to just below 1,400. That's a big move just over the course of a month. And you're looking at these moves like an FRC. I mean, we're talking about going from 150 back in the beginning of February down to $12, over a 90% drop. And so you can keep looking at all these different companies that are just completely imploding here. But then the NASDAQ acts like it's no big deal. In fact, if you look at the price action over the course of the last 4, 5, 6, 7, 8, 9 days. It's up 7 out of the last 9 days. The NASDAQ is. So really doesn't care. I mean, we've had a sell-off about 3 weeks ago. That was something. But let me put my face back above the comments here. No, I get it. It's I'm not getting heavily short here either. I need price to confirm the moves for me, and I'm not quite getting that. I got one short position. I'll add more to it. I'll even increase my exposure in that position with SH. But I need to get more confirmation. We're just not getting that right now. You got to get the dip buyers to quit feeling the need to buy every single dip, because we're just spinning our tires when that's happening, because there's a true need for the market to go down, but you got the dip buyers, you got the algorithms, you got Wall Street. They just can't get enough of buying that dip. So afternoon coffee. It's not even bourbon this time, but afternoon coffee my wife made me. She's a treat. All right. So I got more to talk about here. We've talked about the Qs. We've talked about SPY. What about IWM? Man, this thing is an absolute piece of work. I mean, I guess that's probably maybe a flaming pile of poo, huh? You got this slightly narrowing range here, but as bad as IWM has been, it really isn't doing much. This is the weekly chart of IWM, but look, it's just kind of contained in this range right here. If you can get a breakdown, and we're testing the lower end of that range, not so much on the daily. I would probably say that's your range on the daily right there. So looking at it on the weekly, yeah, that's probably how I should be drawing that line right there. So it's getting close to the lower end of the range. If it break this like 165 level, yeah, you have the potential for some pretty ugly price action to unfold on IWM. Now, also interesting, we haven't talked about this line in a long time, but this used to be a real strong layer of support for a long time. And guess what? We're sitting right on it right now. And so this level of support goes all the way back to 2018. Price is sitting right on it. Does it bounce off of there, or is it break? And then it can break this 165 level as well. So something to watch here going into tomorrow. That might be better than getting short on the Qs right now, because Qs just have this like unstoppable bid underneath it. All right, let's look at the VIX. This thing had a wide range today, actually, going all the way from like 25 all the way down to 20, and it basically settles 1.5% higher on the day. What you want to keep in mind, I don't think the volatility index really reaches extremes until it gets to this like 33, 34 level. Right now it's at 22. So there's a lot of potential there for it to make a significant move to the upside here. But right now, as long as it's sitting at 22, I don't think that's an extended move by any means. I didn't even think the moves from last week were all that extended. We're hitting 30. I still think it needs to get to 33, 34 before I start getting nervous about holding these positions or holding short positions per se. P2108, we're sitting at 16 there. There's like and this is the indicator that measures the percentage of stocks trading above their 40-day moving average. This is sitting at 16. Where I start to get interested in is when we start getting into the single digits, like you get like 5 or 6%, that turns into some pretty good opportunities to the long side. So we talked about the indices now. We've talked about the VIX, the Apple-Microsoft relationship. Look at technology. Now, this encompasses Apple and Microsoft as well. This is your tech sector. But look, again, it's still very, very strong. You're just not seeing any weakness creep into it just yet. Yesterday had a huge opportunity there that the bears squandered today by not pushing the price lower than it did. All right, let's look at we talked about Netflix. This is one that really irritated me today, because you had this strong candle to the downside. That made sense considering what went on with the FOMC and all. But after that, you didn't get the follow through today. So for a while, I've been talking about this head and shoulders pattern in Netflix, and it materialized, and it gave you a little bit of downside, but it found support at the 200-day moving average and also off of this rising trend line right here. Found that support, but this was a good opportunity. It didn't quite test it yesterday, but if it could have broken that level, then you could have had maybe a washout to maybe 250s or so. but instead it goes up like 9%. I didn't even see what the news was. I was searching this morning, never saw. I don't know if we ended up getting any news to explain the move, but I sure as heck didn't see it, and it wasn't really publicly available from what I could tell. But this is a move here that, man, I do not have confidence in it holding unless this whole market can bottom and everybody just becomes inspired to buy stocks again. Let's see. What else are we looking at here? We talked about the big tech. Gold is another one, and then I'll look at BAC as well, and then we can start wrapping this up. But gold, look at the move in gold here. Big time move. And then you also have like a breakout essentially that's underway here with gold. I mean, this is a little layer of resistance here. It saw price break through it just a couple of days ago, and now it's pushing through to the upside, potentially challenging the all-time high for GLD. That would be something, right? So can it get up to this like 193, 194 price? That's what you want to watch for going forward. All right, guys. You guys are a quiet bunch today. That's all right. So no matter what you're dealing with in this market right now, you know, whether you're frustrated or whether you're on cloud nine, you want to make sure that you're still managing the risk, because I tell you, these are very perilous times. I really see a lot of similarities between right now and 2008 with these banking failures, and there's nothing that can zap the confidence in a market like a bank failure. We got a little bit of a taste of it a couple of weeks ago, and we're kind of sweeping it under the rug right now. But if you start seeing another big move to the downside, for instance, when you look at Bank of America, all of a sudden today, it was very interesting. JPM didn't do it. Citi may have started it just a little bit, but not to the same degree, breaking out to new lows here that hasn't been seen all year long. But Bank of America, that is a notable low right there, new low on that stock, and nothing that we saw during 2022. So now we're starting to get to levels that we haven't seen since 2020 on Bank of America. That's a big break right there that unfolded today. And not only for that support level right there, but also you had this little short-term support level where it had some consolidation and it broke below that as well. So keep that in mind. Really some problematic trends developing in this market. I'm not digging it at all. Okay. I still have my one short position. I got into it yesterday. Before that, I was cash for about the last week and a half, looking to add more short exposure to this market going forward. Not because I'm a perma bearer, because I want to see the system fail or anything like that. I'm just following, you know, what the analysis tells me. It's kind of difficult though from times with the 0-day trading, days to expiration trading that takes place a lot of times. Not a lot of times, pretty much every day, and that constant bid that's under the market with the tech stocks. But nonetheless, you know, the analysis, the technical analysis at least still continues to point down, with the exception of Qs. Qs being above that support level right now kind of leaves that that one sector or one area of the market, like your communications and your technology and discretionary, slightly bullish. But we'll see what unfolds. We'll see if the Russell continues to drag down the market like what we saw this afternoon or not. I'm not sure, but wait and see. All right, guys, take care. Make sure to like, subscribe, click the join button down below if you want to get videos from me each and every day. I do tons of videos of market research that I provide for members only. You're supporting this channel in the process, so click the join button down below if you'd like to become part of that. And let me know in the comments if I missed any of your questions, and I'll get to them on the comment side of things as well. Thanks, and God bless.